Hey traders, this is Blake Morrow with Forex Analytics, and you are listening to the week ahead video for April 28th, 2024. Before I get started, well, first of all, this is going to be a huge video. Remember, this video will be chaptered, especially if you watch it about 2 or 3 hours after the video comes out. It should be chaptered so you can actually move forward through the points of the video that you want to see. Secondly, I want to thank Ryan Littlestone, who's our Flow Show host. He did the week ahead video yesterday. If you don't listen to the Flow Show every day, it's a daily show in European hours. Him and K-Man, they cover the markets. Make sure you listen to him. He covered for me last week doing the week ahead video, and it was a wonderful video. I actually watched the whole thing. It was awesome. So thank you, Ryan, for that. Now, I want to cover all the things that are happening this week. I mean, it's a big week. First of all, we're going to talk about the jobs report, obviously, and FOMC. Those are the headliners this week. But we're also going to talk about what happened with the dollar yen, what's currently happening with the dollar yen, and with the BOJ and Ministry of Finance, where intervention levels might be. Are they going to intervene? Those types of questions. I love the fact that we are in we're seeing two-way price action in the market. So we're going to talk about the sell in May, go away concept, but also more importantly, on this video moving forward, Nick from Trading Analytics, he's going to also be doing a little 2 minutes part and his overview of what's happening with the Mag 7 stocks. So make sure you stick around for that. And I want to also talk about the dollar. It's not really performing that well. I don't think we should give up on the dollar, but given the fact of data, yields, where they're at, yield expectations, how they've shifted, the dollar you would think would have acted a little bit better in the current environment overall. Now, dollar yen is excluded, but we're going to talk a little bit about the dollar in greater detail. And a couple things I should remind you, we are still in earnings week. I think there's like close to 30% of the S&P that still will be reporting this week. But we got big ones like Amazon, Qualcomm, Apple, lots of biotech, AMD. So a lot of earnings still to come. And it is month end. On Tuesday, it's the last day of the month. So we saw maybe some dollar buying coming in for corporate month end on Friday, month end in Tuesday. Could be a different story. So lots to talk about regarding the markets. So let's get into it. I'm going to start off with the calendar of events that are happening, and I'm going to be breezing through the calendar. I'm going to stop and highlight some of the key events that I think that really need to be paid attention to. So with that being said, so Monday night, we're going to have like regional S&Ps, regional CPIs out of the Eurozone. You're going to see like, I think, German CPI, maybe Spanish CPI, whatnot. But Monday night, and I'll come back to the Euro and we'll be discussing all this, because remember, these charts haven't been updated in 2 weeks since the last time I saw you. So we got a lot to talk about and a lot to catch up with a lot of these currencies. But Monday, it's going to be kind of slow, but Monday night, we have South African elections. Now, I brought up here just so you guys can see, and I'm not, let me start by saying this. I am not a South African election follower, so to speak. I understand that everybody's looking at, the ANC, the African National Congress, I believe. And and looking for that support to get above 50 cents, 50%. And if it is, it might, they could take full control. They don't have to partner or have a coalition. It could mean a really big move for the Rand. And I mention that because when you take a look at the South African Rand and you just look at how tight of a consolidation we have, there's a good chance that we break out. And if you look at the trends overall, you look at where the South African Rand has gone over the last several years, it has gone down and it should continue lower. But if that balance of power shifts a little bit, you might actually see the Rand gain strength and go the opposite direction. So I think there is a really big argument this week for a potential breakout in the South African Rand, and it's going to start with the elections that I think we should know the results Monday night, I'm assuming. You jump down in the comments below if you're more of a follower of what's happening in South Africa, or you do live in South Africa. We'd love to hear from you. Also, moving along, we have Australian retail sales. We have Australian retail sales, China PMI, but I want to take a look at the Aussie dollar. I want to point out something. First of all, we were talking about the Aussie breaking down. It did, and it actually reversed on the Thursday following the Israeli-Iran attack. I was short Aussie dollars, in case you didn't know. I was short looking for lower prices. I got out on the spike. I just happened to be in front of my computer traveling in Austin, Texas, and it actually reversed. The one thing I want to point out about the Aussie right now, it's acting really well. You know, we just had Australian data come out, and it was really, it was stronger CPI. That's helped the Aussie, but we do have retail sales. I don't really care about the retail sales so much, or the China PMI. I actually care about it more on a, generally speaking, in the Aussie, but not so much on the Aussie dollar. And let me remove this really quick. I'm really most concerned at this point with the Aussie Kiwi. Now, before I leave this chart, I want to just point out a couple things. If you look at this trend high right here to the low, you'll notice we stopped at the 618. So that's worth noting, right? Because if we get above that 618, we get above 65.55. That's a bullish situation, right? So if Aussie dollar, excuse me, if the Aussie dollar data is strong, it goes up. Chinese PMIs, if they come out, they're strong. The Aussie could break out. But I'm more concerned, like I said, I'm more concerned with the Aussie Kiwi. And I want to show you this chart. This chart is a big deal to me. You can see the Aussie Kiwi has broken out to the upside, and that means that the Kiwi is going to underperform. The problem with the Aussie Kiwi is we hit the 161% extension, but if the data continues to be strong, retail sales, Chinese PMI, it's going to bolster the Aussie Kiwi even higher. So we could see the Aussie Kiwi reach for levels like over here around the 111, 110.80, 110.90. So I don't know if the Aussie Kiwi is done yet, and I think you should keep an eye on it. All right, moving on. Tuesday, we have Eurozone flash CPI estimates for the entire Eurozone. So let's talk a little bit about the Euro really fast. I don't even know if we should be talking about the Euro, so to speak, but we should be talking about the Euro Yen. But anyway, I'll go back to the Yen a little bit later. The Euro, I was short some Euro, got out of that short. This is the same thing on, and it happened with the Mexican peso too. I was long dollars, short Euro, short Aussie. If you're in the Forex Analytics chat room, you saw me get out of the trades in the evening. I got out of all my dollar exposure at that point due to the Israeli, all my dollar against most currencies anyway, due to the Israeli airstrike to Iran. Anyway, needless to say, the euro has actually backed up right to the underside of this trend line. So I do believe that this is going to be kind of a big deal. Let's get rid of that, and let's remove this, and let me show you something a little bit more specifics about this chart. So what you're seeing here is what I would call a bear flag pattern for now. Right, it's a bear flag pattern for now. You guys can see that, and obviously, if you use Forex Analytics, you can actually go through the Euro basic technical analysis and follow the same analysis here. And you've known about this, all week long. We talk about it all week long, and update your charts every day. But on the Euro, what we're doing is we're backing to the underside of this trend line, this triangle, previous triangle. And also, you'll notice this is the 50% retracement, right? High, low, 50% retracement. You can see it right there. What does that tell me? Well, that tells me if we get above that level, if CPI, let's say, comes in a little stronger than expected. Remember, I wanted to share with you guys this while we're having this discussion specifically, because we're talking about, Eurozone inflation. There's an IMF World Bank meeting, and I want to just read you these highlights. This is from the Brookings Institute. Read these headlines here. I'll read them for you. Let me get my head out of the way really fast. U.S. dollar has risen to a stunning 30% over the past decade. I know people have been calling the death of the dollar for a long time, but Did you just read that statistic? That's crazy, right? These are topics that the IMF and World Bank are discussing. And you would think, given the rise, consensus would be the dollar bearish, but last week's meetings were the most dollar bullish in a very long time. There are lots of focus on cyclical outperformance of the U.S. economy, with that outperformance keeping U.S. inflation stickier than elsewhere, forcing the Fed to stay on hold even as other central banks start to cut. That's why this week's ECB, inflation readings, we should be paying attention to them, because this is a true statement. This is one of the reasons why the dollar has outperformed. Anyway, going on, U.S. elections, geopolitics we're seeing as adding to dollar strength, which I find ironic because I think both Biden and Trump, they are looking to punish the dollar a little bit. So I was a little surprised by that. Option implied volatility in currencies are unusually low, but that usually means the volatility may be rising in 2024. And that I agree with. I think that when you have, the Fed staying pat, possibly, which we'll talk about more here in a second since we have an FOMC meeting, and maybe other central banks cutting, that divergence of expectations is what's going to create volatility in the markets. So anyway, the IMF and World Bank are discussing it. So I think it's like important that we talk about it too, especially given the fact that we have such important economic data coming from Europe and the Eurozone. So with that being said, 107.50 going to be key resistance in the euro. All right, we also have Mexican GDP. I am going to discuss the US dollar Mexican peso as we review the trades, just because it was the trade setups from last week. But I want to point out a couple of things. That descending trend line that you see in the dollar Mexican peso, that's uber duper super duper uber important. So anyway, Mexican GDP, U.S. consumer confidence on Tuesday. Tuesday after the close, we have Amazon, AMD earnings. Worth noting, Tuesday night we have New Zealand employment. Go back and focus on that Aussie Kiwi. I think that's a chart you need to be paying attention to. Wednesday, we have ADP, ISM, manufacturing data, JOLTS, and the Fed. Now, let's have this discussion about the Fed, because we still have, Fed meetings coming up, and let's talk about the dollar and what I discussed a little bit earlier about some of the risks in the dollar. So, and this is going to be a rather long discussion, so sit back and enjoy this conversation, if you will. So here's the dollar index, right? We have a bull flag pattern. Technically speaking, it's a bull flag pattern. You can see it's highlighted in red. This is the only chart, most of you know this is the only chart that I update throughout the course of the week, because it's the same chart that I do on the dollar index when I'm doing analysis here on Forex Analytics. I do this analysis here, and I use this chart, and I update all the analysis here and update the chart. So this is the chart that, even though you see it on the week ahead video, it has changed. Maybe not dramatically, but you can go back 2 weeks and see what I was drawing. But we were looking for the Gartley pattern to complete. It completed, and we're still the questions, and the jury is still out. Is this a Gartley reversal, right? A Gartley reversal, or are we going to turn into a butterfly and go a lot higher to 109? A lot of that has to do with the Fed and expectations, since the market is currently repricing the repricing, right? We had, going into 2024, the market was expecting 6 rate cuts. Now we're down to maybe 2. And then after this week's Fed meeting, there's only a few Fed meetings left. Think about that. We have June, July, June 12th, July 31st, September 18th, November 7th, and December 18th. So that's how many? That is after this week's meeting, we have 1, 2, 3, 4, 5. How many rate cuts are we going to get, especially that we're in we're in an election year, right? That's another thing that we need to be talking about. That's where this Fed meeting is going to be really important, because if you look at most banks still expect there are going to be at least 2 rate cuts. But how about if we walk away from this week's meeting, wondering if there are going to be any rate cuts this year, because economic data has been still fairly strugglingly strong. We've seen some economic data this last week question that, but I think the technicals tell us everything. And that's the point I'm going to try to make right at this moment in time, is if the dollar manages to break above 106.50, and I hope you're writing this information down. If we happen to break above 106.50, I think you have to be very prepared for ridiculous dollar strength. I mean, because a bull flag pattern is going to put us in breakout territory. You think about this, bull flag pattern, we are in breakout territory. We are going to be, ripping higher. But the flip side to that, and again, I got to give you both sides, because I am a little concerned that the dollar hasn't acted as well as I thought it would by now. But we've been consolidating basically for the last 2 weeks. But the fact of the matter is, if the euro breaks back below 105, it's actually 105.10, I think the dollar is going to get clobbered. And there's a lot of people that believe the dollar is going to get clobbered out there. There's a lot of people that are very bearish to the dollar. I am not in that camp. I'm in a very neutral state with the dollar at this moment, but I'm aware that either direction, we could really see some explosive moves. So a lot of that's going to reside on not only the Fed, but we also have the jobs report this week as well. So some things to think about, okay? So again, this FOMC, no one's expecting the market or the Fed to do anything, but setting the stage for what's to come over the next 5 meetings, that's going to be the very big market mover, and why everybody's going to hang on every word of Jerome Powell, why everybody's going to be looking at the dot plots, everybody's going to be looking at inflation expectation changes, changes in expectations from the labor market and everything else. So this Fed meeting, as much as we all know that nothing's going to happen as far as mechanics, at least we think, there are potential expectations being set for the next few Fed meetings coming up, being in an election year. All right, so just keep that in mind. All right, moving along. On Thursday we have Swiss CPI. Now remember, Swiss National Bank only meets 4 times a year, so I don't think that this Swiss CPI is going to be a big market mover, but it's worth noting, those of you that have Swiss exposure, those of us that have Swiss exposure, we have U.S. unemployment claims, Apple earnings after hours on Thursday. Friday, we have the Norges Central Bank meeting, and I do want to pull up the U.S. dollar and Norwegian krona really quick, because this damn currency pair has been stubbornly strong. And so let's go ahead and do something here. Let's do a little bit of work on this. The market is not expecting the Norges Central Bank to make any moves on interest rates. However, there is a chance that they could be more dovish, setting the stage for rate cuts. So given the fact, understanding that the Fed meets before the Norges Central Bank, it could set us up for an extreme rally, especially if the dollar starts rallying and the Norges Central Bank is extremely dovish. We could be challenging these highs, and this is where it becomes a big deal, because if we start breaking above that resistance that you see right here at around 1130, the next thing we're going to be challenging channel resistance, and this is where the dollar starts to run away from different currencies. We've already seen it in the yen. Can we see it in the Norges Central and the NOK and the euro and sterling? All those things, they are potentially can happen. All right. Continuing on Friday, we have oh my gosh, I might sneeze. I'm going to try not to. We have the non-farm payroll. So obviously the non-farm payroll is going to be a big deal. I don't think I need to go. Well, I can go back into the dollar just for your reference so you guys can see it. As far as the dollar index goes, I mean, look, jobs do matter, and the Fed's focused on jobs and inflation right now. We know that. And so as a result, the headline number at 250,000 jobs, give or take, is going to be a big deal. We're going to be looking at services PMIs after the jobs report, so you can get a double whammy, if you will, following the jobs report. And then everybody's going to be looking at the not only just the payrolls report, but also the unemployment rate, oh boy, I had a brain fart. Saturday morning, give me a break. That we'll be looking at wages too, obviously on Friday as well. All right, let's continue on and cover just a few other things before I bring Nick on. So let's talk about gold, because gold, we stalled, and I know I've brought, well, this is our chart that we talk together about. If you go over to the weekly chart, and I think I drew this for you a couple weeks back, that this trend line might be resistance. Remember, I was like, maybe this is a channel. Given the fact that we rejected it, I think if you're a gold bull, you have to be respecting it. Now, I'm not bearish. Let me just make something clear, at least not yet. I think gold is holding up very well, and I think you have to buy dips. I mean, if we're stalling or holding around the 161% extension, you have to imagine that any dip towards 2200, 2150, you're going to find buyers. So any dip like this probably should be bought, right? I mean, that's what I would be thinking initially. I'd be thinking, yeah, if we get a dip like that, it should be bought. The other thing is obviously if we start breaking above these highs, it becomes very, very bullish, like runaway freight train type of bullish. So I don't think you should be bearish. I think you should be buying dips. That's how I view gold. There's another thing that I think you should be looking to buy dips, and that would be copper. And we will discuss copper a little bit greater detail because we talked about it as being a possible short just a couple of weeks back. But what you're going to notice in copper, has broken out. Now, here's the other issue that I have with copper. For those of you that are harmonic trading type of people, well, here you go. All right. So one thing you have to be a little careful with, I know a lot of people are like, wow, copper's so bullish. It is, but at the same time, we have to start looking at potential harmonic patterns here. The 74.6 Fibonacci level that I don't pay attention to. I pay attention to 786, or is it 76.4? I forget. Anyway, it's right close to here. This is the level that I think we need to watch, do or die. But the fact of the matter is, any dip in copper probably back down to here, at 435 is going to find buyers now. Okay, so that's something that we should be thinking about moving forward. Now, one other thing I wanted to mention really fast is if you look at the bond market, you take a look at the 10-year bond. Where is it? I know I have it up here somewhere, and I'm going to find it because, there it is. If you look at the 10-year, this is the one thing that's got me a little concerned about. And the ZN is this is another chart we look at on Forex Analytics. So I'll just pull it up here so you guys can see my analysis throughout the course of the week. On the 10-year notes, what we've looked at all week is targeting. We were targeting the 161% extension, and the fact is that we just broke it, but the RSI has started to diverge. So as we're starting to see a divergent relative strength into the 78% retracement, into the 88% retracement, you're going to notice that downside might be somewhat limited, and you can see how we did that. We're actually stalling because relative strength is divergent. That's one of the bigger risks that I see for the dollar right now, because if the bond market does catch a bid and yields start to come down, how's that going to affect the dollar? Because the dollar hasn't really rallied too much as I thought, with yields rallying, across the curve as much as they have. So that's, again, one of those things that as a dollar trader, you got to be, thinking about and keeping in mind moving along. Now, what I'm going to do right now, though, is I want to bring in Nick Groves of Trading Analytics. He's going to just take you through some of the key stock market components, and then through some of the Mag 7.
Hey Blake, thanks for letting me join on here. This is Nick Groves with Trading Analytics, and where we like to talk about equities and the general market, so let's do just that. So Alphabet joins the $2 trillion club. What a move we saw, and what magnificent earnings they came out with. The stock gapped up and closed the day up 10.22%. Now the question is it going to correct? I mean, even during the general market correction, Google didn't really flinch. But is it at resistance? My answer is yes. Will it correct? I don't know. But why is it at resistance? If you take a look here at the highs in 2021 to the lows in 2022, we're finally at that 127% extension. Just above it, we're also at channel resistance and we're overbought on the daily RSI. So it's a tough call. It looks relentless, but that's a big gap and it might want to get filled. So just pay attention to that. But one thing that's also been really strong is NVIDIA. I mean, just taking a quick look at this weekly close, I mean, right back up. But from a 2-hour perspective, we came back, closed above the 50% retracement from this correction that we saw, above trendline resistance. And I think it could be a market mover next week. Semiconductors certainly have. One that hasn't performed as well is AMD, and it's fallen 56% from the highs. But I will note that it came down to this 618 retracement, and it's also closed above descending channel resistance. So could it make its way back up near 170? I think that's entirely possible, given the fact that if you look at semiconductors, this VanEck ETF, from the lows in 2023 to the highs, we corrected pretty much perfectly to the 38.2 fib. Now, the 38.2 fib is the continuation fib. So if it's going to continue, it's likely to drag the rest of the market up with it. And if you take a look at the rest of the market, I had a PCE today. I was looking at the NASDAQ and I saw a bull flag pattern and it looks like it triggered. If that decides to play out, guys, we're looking at somewhere near 18,237 in the NASDAQ futures, right in between this 618 and the 786 of this correction. So we could come into one of these fib zones and see if we want to test these levels. And where would that take you in the S&P? It would take you, which also had a bull flag pattern playing out, somewhere back near 5,200, everyone. And I know that didn't seem possible the other day, but sentiment can flip really quickly. And the way in which we run to certain levels can get exaggerated. And we're here to help you guys with that. And if you want any help, just check us out on Twitter, Trading Analytics with an X. I'm here posting pretty often, showing these things ahead of data and giving you guys video updates. So if you want any help, just join in. We're happy to, be along for the ride. So hope you guys all have a great weekend. Thanks so much.
All right. Thank you, Nick. I appreciate you coming in and giving us all an update on, the Mag 7, some of the stocks that reported last week and, some of the price action in stocks like Microsoft. I know I enjoy it. I know a lot of you traders really enjoy that. And remember, follow Nick Groves at Trading Analytics. His Twitter handle located down below. And make sure you follow him there. He's got a YouTube channel. He posts quick videos on stock market updates, what stocks are moving. So make sure you check him out there. All right. Now let's discuss. I know Nick already talked about some of the broad markets. I want to talk about the two-way market in the S&P, where I think we're at. So and also this whole sell in May, go away concept. So first and foremost, if you look at the S&P, I believe because we broke out of this channel, now we're seeing two-way price action. You can see the 50 DMA is coming in as a near-term resistance. And let's zoom in here a little bit. And just I think you should be looking to sell risk on rallies, to be frank. Now, that also means that you should probably be looking to buy dips as well. Again, when I say two-way action, what I mean is there's going to be a lot of up, down, up, down, up, down. Will we eventually sell off or will we eventually rally to new highs? I'm not sure yet. I think a lot of that hinges on, the Fed, geopolitical risks, interest rate expectations. But I believe in the near term, we're going to see opportunities to buy and sell. So with that being said, the S&P, I would say that the 618 retracement around the 5150 level should offer some really good resistance moving forward. But rather than me going through the NASDAQ, the Dow, the Russell, let me just say this. I'm going to cover those, and we cover them a lot throughout the course of the week. If you don't listen to our show every day, that's free. You can catch the link down below. Not the Morning Edge. The Morning Edge here is a private show for Forex Analytics subscribers, but the F.A.C.E show, which we do a lot of great interviews. Dale Pinkert does a lot of great interviews of so many market experts throughout the world. So make sure you listen to that every day. But by getting caught up there, that's where you're going to hear my voice. You're going to hear Ryan. You're going to hear K-Man. You're going to hear Dale. And we cover all these broad markets. So if you're not listening in every day, it's free. just go down below, click that link, and start listening. So I do want to talk about, rather than going through all the markets, like I said, I just want to talk about the sell in May, go away concept. And let's just do a little bit of homework, because you're going to hear a lot of people talk about, oh, seasonally, this is the time that, you know, we should be selling stocks. All right, well, let's how about this? Prove it. Okay, so let's go to May of last year and let's talk about that. So in May of last year, if you look May and then you look several months later in October, when you typically want to be buying stocks, you know, well, actually it's right here. We've been we moved higher. So sell in May, go away didn't work, right? And matter of fact, you had stocks go up all summer long last year. Well, let's go to the previous year. So the previous year, here's May. Where's May? May, somewhere around here. And then where's October? October. This actually worked, right? Sell in May, go away. But we've seen a lot of two-way price action, you know, the previous year. Now let's go a year before that. So here's May, April, May. Here's May, right? So we saw a little bit down, and then October, somewhere around here. Well, that didn't work, right? Didn't work at all. So, you know, last year didn't work. The year before that, in 22, it worked, but in 21, didn't work. Well, let's go the previous year. Here's May, right? Here's May. And basically the market went straight up until July, or until October. I mean, October, we're here. So didn't work the previous year. Go back the previous year. You can do this and just understand that the sell in May, go away idea, it's really not very consistent, at least not in recent memory. Does that mean it's not going to work out this year? No, I think that there is the setup where it could happen this year. But if you're hanging your hat on, oh, seasonality, this is what happens every year, a type of approach, I don't know if that's the right thing to be doing. This year, like I said, it could be different, and we could see sell in May, go away, because it's all about expectations. The market, if the market says, oh crap, we are just not going to get rate cuts this year, then yeah, stocks might actually come down. But if people believe that the Fed might actually raise or cut rates this year, and maybe they have to cut rates a few different times, because it's an election year and who cares, well, maybe the stock market continues to rally. So this year could be that year, but I wouldn't just be selling in May and, just start shorting stocks because it's May 1st. I don't think that's obviously, just looking over the last several years, that's not an idea that's really worked. So that's just something I want you guys to think about, because you're going to hear a lot about this sell in May, go away. And I don't know if that's necessarily, the trade that is going to be working this year. But I do think it's going to be two-way price action. That's why listening to this weekly videos are important to you, because you get a good idea what's going to be happening for the week. Matter of fact, if you like these videos, make sure you give me a thumbs up. If you don't agree with what I'm saying, jump in the comments down below. Tell me about it. Or if there's something I missed, jump in the comments down below and tell me about it. Or subscribe to the channel. It's free to subscribe to the YouTube channel of Forex Analytics. It's also free to hit the bell icon, that little ding dong bell. Hit the bell icon. This way you're notified on your desktop, on a mobile app, wherever you have YouTube, that this video has been released. So click that bell icon. Free to do all that stuff. All right, let's move along. A couple other things I really should. I was going to talk about crypto. I don't really want to talk about crypto, other than if you look at Bitcoin, what's happening right now, we're just consolidating. I'm still worried. I still worry about the idea that we have this false breakout above 70,000. But the fact of the matter is, Bitcoin is not pulling back. I think we got to get well below 59,000, which would be right about here. Let's just say roughly right around. Oops, not there. A little bit lower. You got to get below 59,000, and then if we get below 59,000, I think that is a bit of a warning sign that we got a false breakout above those highs. But we are currently just consolidating gains. And if you're a crypto bull, I don't think there's anything to really worry about as far as being a crypto bull at this moment in time. So let's discuss, at this point in time, we're going to discuss the trade setups for next week. But before we do that, we're going to review the trade setups from 2 weeks ago. All right. So the first trade setup I had from 2 weeks ago was you know what? We're going to talk about, actually, let me take a step back here. Before I go into the review, let's talk about the US dollar Japanese yen. And let's talk about the BOJ, and let's talk about what happened, because this is vitally important. It's important that we talk about this because we're going to be discussing the euro yen, and I told you guys we would talk about the BOJ. The BOJ met, and it looks like that the BOJ, well, the Japan basically, UEDA, doesn't care. The yen's completely weakening. Matter of fact, let's look at the 6J, and what you're going to notice here. What you're going to notice here is this: the yen is breaking down across the board. This is the 6J, as it stands, the contract. Now that 6J stopped trading before, some of the spot market continued to trade, even as these markets closed. That's why the US dollar Japanese yen really closed at its highs above closer to 159. And frankly, it looks like we can get there. We can get to 159, 160. If you don't know why we can get there technically, and I wouldn't hang my hat on anything technical right now, because you have the 127% extension comes in at 159, right? You can see it right here. Comes in at 159, roughly. It depends on what feed you're looking at, but it's right around 159. You have 161% extension of this move that comes in at 159. 50 or 80. I don't know if I drew that perfectly or not, but it's about 159.50, 159.60. You can see some confluence up there. I think we'll reach for it first thing in this next week. Will the Bank of Japan Ministry of Finance intervene? It's possible. Don't forget that speculators are aggressively short the yen. That means everybody's expecting the dollar yen to continue to move up towards 200. And when I say institutional, large spec counts are that they're leaning into this. And it's like, what's the Bank of Japan doing? Are they just importing? Are they trying to import inflation by keeping a weaker currency so everything costs a little bit more? Quite possibly. You saw Tokyo CPI this week. It was horrendous. It was like, I'm like, what? Okay, they can't even make their mandate again, even in this environment. So it's no surprise that the yen continued to race higher. Now, I personally traded the dollar yen on the short side because I've been planning on it for the last couple of weeks. When it got to 150, 154 or 153 and change, 154, I started getting short. I got short a small position and I got stopped out, following the BOJ. Fine. It's the way I wanted to trade it. I've been planning it for a few weeks. I took a loss and I moved along. But look, it looks like we can extend even further. I think what we have to be watching for, and one of the things that we should be looking for if you are trading the dollar yen, yes, can we get intervention at some point? Sure, why not? Doesn't seem like the BOJ or the Ministry of Finance is too terribly worried about the depreciation of the yen at this moment. But again, if you look at the 6J, it is now, you look at all yen pairs, euro yen we'll go look at here in a second. But if you look at all yen pairs, or the yen in general, we are accelerating at a pretty rapid and probably fairly alarming rate for the Ministry of Finance and the Bank of Japan. I'll tell you this much: if they do intervene at this point, and for some reason we reverse, from, let's say, these levels, and we reverse higher, like by 5%, and create some sort of false breakdown, if they have some sort of an intervention effort that is very massive, and it finally reverses course, I wouldn't trade into that. Like normally, most people say, yay, intervention, great, you just gave me better prices to buy dollar yen at. This time could be different. The reason why is the Bank of Japan, is trying to stabilize their currency, but more importantly, or the Ministry of Finance, or the Japan is trying to stabilize their currency, but more importantly, remember the Bank of Japan, or Japanese Bank of Japan is actually trying to raise rates. where other central banks are not. So any type of massive intervention effort might actually stick, especially if you see some technicals that suggest that a false breakdown has been made. I'm speaking way out of turn because I don't know what's going to happen. Obviously, I thought they might intervene around the 155 level. That didn't happen. So what's to say they won't do it at 160? What's to say they won't do it at 170 if we get there in the dollar yen? What's to say that the 6J can't drop another 5% before they get concerned? I'm not saying any of that. That's why I think you have to approach the yen with extreme caution right now. If you are buying the dollar yen, you just have to, realize that if you get stopped out, you could get hurt really bad because it's going to blow right past your stops. And the flip side is if there is intervention, I think we need to be on the lookout for how big was the intervention, how aggressive did they do it, and if they did do it, what's the price action following that? Because I think that's going to be very, very, very telling in the weeks and months ahead. So anyway, I just wanted to discuss that because, yeah, I took a loss. Fortunately, it was very small because I took a small position. But I know we are breaking higher, and it looks like I said, the dollar yen could go to 160 as early as Sunday night, Monday morning in Asia. All right, that takes me to the review portion of this video. So let's talk about the euro yen. We said it's a setup for a double top. Well, that didn't happen. We didn't even get to the neckline and break down. So that's a scratch. It was a setup, never happened. So that setup didn't go. Matter of fact, if you look at the euro yen, we are approaching levels that we have not seen. You have to go to the way back. Let's see, euro yen. Let's pull up ICE data, which would give us a little bit longer term. We would be seeing levels we had not seen since 92. That is a long time ago. Okay, so anyway, I know you're trying to think what you were doing in 1992. I was in the Marine Corps, but I don't know what you guys were doing. Anyway, okay, so euro yen didn't work out. We just called it a scratch because nothing ever happened. The next one, dollar Mexican peso above 1675, looking for 200 DMA. Well, that happened, and then some. Matter of fact, by the time I got out of the dollar Mexican peso, it ended up being around 1751. That was on a Thursday night. Israel launched attack against Iran. I got all sorts of alerts on my phone. I was traveling, and I just exited my position. So, yeah, above 1675, we target the 200 DMA. I got that and double that. It literally was one of the trades, being in the euro and being in the Aussie short as well, that really, made my month, if you will. So great. That one worked out just fine. Then the third one, though, short copper while below 440. Now, it depends how you traded this. And I know we talked about this, before I left. And so that would be right here, right? If you look at Monday, the 15th of April, we dropped and we went to, 14 and let's say 27, 28. But what we did by the end of the week is we eventually broke out. So the fact of the matter is that if you traded it on the short side, you might have made money, but here we are 2 weeks later, it actually broke out to the upside. So, I'm going to call it a loss. So one is a scratch, one's a gain. Second one, or the third one, you can count it as a loss, but some of you might have actually made money by doing that. Not sure how you trade it. I didn't trade it, so there you go. And I think I told you 2 weeks ago, copper is not something I typically trade, but for those of you that do, there you go. All right, this week, 3 setups for this week. The first one, I believe that we need to short risk ahead of the FOMC. So what that means is short the S&P. I think shorting the S&P probably somewhere between where we're currently at, the 50 DMA or close to the 50 DMA, to the 618 retracement, which would be 51.45. I think that is how you should be approaching. And I need to write this down. 51.45 is the 618 retracement. I'm writing this down for your benefit so we can review that for tomorrow or next week. I think while you're below there, you just play this two-way price action. But you want to do it ahead of the Fed, I think, because the Fed's probably not going to give us any indication of what they want to do, which would be probably risk negative. All right. The next one is actually a setup. It is the number 2 would be the dollar index. As I told you right now, I'm a bit neutral on the dollar. I'm not bullish. I'm not bearish. I tend to lead to the bullish side because of the bull flag pattern. So if we break above this resistance, you know, the 106.50, but really maybe above 106.25, it's very bullish. But the fact is, if we break back below 105.10, it's bearish. I don't know if that's going to happen this week, but I think it is a good trade setup because I think it'll play in either direction because we'll have probably the argument on why the dollar is breaking out or breaking down by the end of the week. So that's like more of a setup, but I believe that we can it's going to be tradable this week. Last but not least, which would lean into being a dollar bull, is I am looking to buy dollar Canadian on a dip down to 136. So 136 and change. You know, the dollar index, or excuse me, the dollar Canadian, I think dips down to there. You know, this is a big breakout point. Don't forget that if you look at, you know, here, and here, or so, let me just go ahead and put that right there. And you take this line right there, you can see this 136. Oh, that's 136.30. It dipped down to 136 break even. You can see all of the holds, you know, below there. We couldn't close above it that one day. Then we finally broke out. I believe this level is going to be the level where you want to be long dollar CAD. I think we're going to get a reaction from there. So in other words, I'm looking for a move like that. All right, guys and gals, I know this has been a long video. Like I said, it was going to be a long one. If you like these videos, if you think this is beneficial, make sure you give us a thumbs up. Try Forex Analytics. It's only $1 for 10 days to try us out. Best way to be involved in Forex Analytics is check out the Trader Funding Program because, you know, if you're looking to trade, you know, somebody else's capital, you want to risk somebody else's capital. Well, by going through an assessment here, you actually become a Forex Analytics member for a period of time based on which account you are looking to access. So make sure you check out the Trader Funding Program. It's a great way to have camaraderie and being able to talk to traders while you're navigating through the markets and trying to access larger amounts of capital with your trading accounts. All right, guys and gals, my name is Blake. I'm with Forex Analytics. Thank you so much for listening to me. I know it's a very, very valuable time to you, being the weekend away from the market. So I just want to thank you for spending your time with me. I will see you on Monday morning on the F.A.C.E show. You guys have a great remainder of your weekend. Hey traders, this is Blake Morrow with Forex Analytics. Thanks for stopping by our YouTube channel. Don't forget to like these videos, share them, and subscribe to our channel so you don't miss any of the content that we provide here for free. Thanks for stopping by. I'll see you in the next video.